How about what are the ultra wealthy doing? I'm talking about the folks with family offices. Let's talk about another hot PPI reading. And of course, Goldman Sachs calling for the creator economy to double in the next 3 years. Folks, clearly my voice is a little hoarse this morning. We just completed day 1 of the ORAT event. We are going to have day 2 kick off in about 90 minutes. But it is Sunday, and that means I owe you a daily financial news. We're going to do it early so we can get to the event, and I will not be stressed out, so I hope you appreciate that. Let's just go through the notes in the order that I read them. Step 1, hot PPI. Again, PPI is Producer Price Index. You could think of it as what wholesalers or retailers pay. And then, of course, you and I pay CPI. PPI had been trending down quite significantly for the last 3 or 4 months. I had expected that PPI would continue to be soft, and I was wrong. Clearly that I deserve to be wearing a swing and a miss t-shirt, but I actually don't have one in Vegas, so I need to fix that. But yes, I was certainly wrong about PPI. It, like CPI, came in higher than expected. But what are the numbers? Again, we do last expectation and what happened. So last month, it was negative. It was truly deflationary. Came in at negative 0.2. Expectations for January were for a positive 0.1. In reality, we got 0.3. So again, a significant beat, and really should have finally put a pin in the odds of a March rate cut. Frankly, it should put a pin in a May rate cut. At this, folks, we got to be talking about June, in my opinion, and maybe even September. So inflation is at best bumpy, it's slow, whatever that happens to be. But yes, inflation reading on Friday, PPI was a swing and a miss, hotter than expected. How about Larry Summers? Larry Summers is in the news a lot. He actually indicated that there is a good chance. No, I shouldn't say good chance. What was it? Let me make sure. No, not good chance. There is a chance that the next Fed rate move is not lower. Not lower. So that means that Larry Summers believes that there's a chance, and at this point, Larry puts that at 15%, 1.5. So there's a 15% chance that the next Fed rate increase will be higher. Now, clearly at 15%, that is not a base case, but to date, at least in the last week or so, he is the only notable economic figure that I've heard talk about the Fed possibly going higher. Why is this important to you and I? It's important to you and I because remember that thing in mortgage where the difference between the 10-year and the 30-year was starting to contract. Banks went from about 320 basis points to today about 280. That was a lot of the collapse in mortgage rates. If banks start to believe that there's a chance that the Fed will go higher versus stay current or go lower, we could see that re-expand. And that would take mortgage rates up, and we could, in theory, see 8% mortgages again. Again, I'm not calling for that, but I think it's important for all of us to be aware that there's a lot of stuff out there. Hey Josh, appreciate you being up early. Thank you. Day 1 was amazing. I had a lot of fun, Josh. Thank you for the super chat. I appreciate you. So again, we need to realize that the economic job market appears strong and inflation is still high. I think that's all going to get a little less rosy in the next 30 to 45 days, but we should be paying attention. On that front, we've had some more layoff announcements. Again, I think there was about 86,000 in tech in January. Just on Friday, at least when I saw them, Nike, right? Nike had talked about a 2% layoff, which equates to about 1,500. Toast talked about a 10% layoff, but which is about 550 people. So again, people are trying to get their burn rates right. They're tinkering around the edges. They're watching profitability. Again, folks, we've talked about this for a year. If you're nervous, get close to revenue or get close to customers, right? I have been an executive. I have had to make those hard calls. And if you were tied to revenue or directly tied to customers, I like your chances. So watch that. Fed President Barr, what is he talking about? Bank supervisors. They are closely focused on commercial real estate risks. I don't know about you, but something I just feel in my spidey senses is that we are going to see the quote-unquote bank term funding program expire in early March. That really had to do with treasuries. I suspect there will be a bank term funding program-like thing for commercial mortgages. It is my hope that it is not a true bailout. What do I mean by that? Well, in the Great Recession, we unfortunately almost rewarded the idiots who broke the system. If we do that again, not okay. And I don't think we will. But it's a chance. So what I think is the most likely scenario, again, to be created, is something where equity is wiped out, equity goes to zero, and then the Fed takes over the debt with a hold to maturity. So this would be kind of a combination, where the equity gets wiped out, hundreds and hundreds of millions of dollars, if not billions of dollars in equity gone. But it does allow the banks to have solvency to get to the other side. And frankly, like TARP, this could be profitable for the Fed if done right. But clearly, like lots of things, it can be done wrong also. Sorry for that. My alarm's telling me I need to get going to the event, but we shall continue. Citigroup's chief economist, he's out talking about no soft landing. He is in the recession camp. He's calling for a recession to start in the summer or middle of 2024. He says, watch retail sales, which again, last week were soft. Watch credit card delinquencies. They are rising. And watch for the labor market to start to flash weaker labor statistics. So again, things to watch. Apollo Management, not to be outdone, says the soft landing is now, wait for it, the least likely outcome. Folks, there are a lot of folks that are kind of turning negative on the U.S. economy. Folks, again, like Larry Summers saying we're going to have to go higher, talking about the soft landing being the least likely outcome. So again, stuff that we're going to have to watch every week. We're going to have to watch the weekly unemployment claims. If things are breaking, I think we will see it there first. But yeah, lots of stuff for you and I to watch. It's very interesting. Yesterday, we had Sean Cannell. Shout out Rise and Grind. Yes, Sean, thank you for participating in our event yesterday. One of the nuggets that you dropped yesterday is that Goldman Sachs estimates that the creator economy will double in the next 3 years. You also did an excellent job talking about how W-2 employees should really take the opportunity to take their passion, their hobbies, their interests, and become a part of the creator economy. You gave some very interesting advice around how to create a business or a media company and use it to have top line versus bottom line expenses. Folks, get in the game. If you have a hobby or passion and you're my age, you have probably been doing it for a decade or 20 years. There is a tribe out there. There is folks that you can be around that will just put a huge smile on your face. And heck, who doesn't like money? Again, creator economy, Goldman Sachs to double. Then there's Mr. Beast. Mr. Beast, I heard that Mr. Beast is estimated to gross, so top line, gross $600 to $700 million a year. Let that settle in. Let's just say it's 700 million because the math's a little easier. This is freaking insane. That's nearly $2 million a day. A day. A day. My brain cannot comprehend that. Now, of course, Mr. Beast does not consider himself quote unquote rich because he reinvests all of that money into his next videos. This is something that Mr. Beast has been doing since the very beginning. He's been taking his, I don't know, AdSense and reinvesting in the business. But I do think it is amazing to think, I don't know, what is he, like 28 or something? $2 million top line a day. I find that fascinating. I just do. Let's talk about Mohamed El-Erian. He is talking about the next rate cut could be after June. After June. And to be clear, that could be too late. This again is Mohamed's opinion. He is basically looking at the data and he's saying that the Fed may wait too long. Again, Mohamed is talking about the odds of a recession being below 50%. But if the Fed cuts late, the chances of a recession go higher. So again, lots of things to look at here. Then lastly, what are the rich? What are like the uber rich doing? We're talking about the folks with family offices, folks. We're talking about the top 1% of the top 1% of the top 1%. Well, according to KKR, who services family offices, let me get the numbers again. 52%, 52%. So more than half, they have moved into alternative investments. Things like private equity, buying businesses, things of that nature, commodities, for example. That is up from 42%. What I found most interesting is their cash balances. We have heard for about the last year that the wealthy, and I assume that would include the uber wealthy, such as family offices, were sitting on more cash than normal. Well, it looks like in this case that is true. They went from 11% of their portfolio to 9%. Also, they are not as much into the public stocks. Are the wealthy telling us the stock market is priced too high? Maybe. They went from a 32% exposure down to 29%. So again, folks, a lot of stuff going on today. We've got day 2 of our event. If you were on the Zoom yesterday, hopefully that worked out well for you. I will try to start it again this morning at 7:45-ish. The party will get started at 8. I hope you enjoyed the speaker lineup. Everybody over-delivered and exceeded expectations. But I want to shout out everybody that came in the room. When I kicked off the event, I asked you to network, to make friends, to take pictures. And near as I can tell, you guys executed. You were flawless. I really hope to hear about new friendships and relationships and support. Remember, in this business, as we go forward, there may be people above you that will help you go higher. There will be people beside you, and there will be people below you that you can pull up. Let's do this together. Let's have fun together. Let's support each other together. So folks, I hope to see you at the event. I will be there 7:30-ish. We will get started at 8. You're amazing. Take care. Later.